up, everyone? How we doing? Spencer Israel here with another. Oh crap! You know what? Our all-day stream just went to a freaking ad. Oh man. Okay, I gotta go fix that in a second. Here, hold on. Sorry, everyone. Let me get the stream fixed. We're doing Fireside chat time. I've got Tom Nash here waiting in the background. I'm gonna bring him on in 1 second. We just get our all-day stream on Twitch fixed. It's playing a damn ad right now. All right. How are we doing? Let's turn the light on. A little brighter. Get some light in here. How are we doing, everyone? It's an okay day. I mean, it's not good. It's not good. I mean, we've sold off hard in the last few hours, really in the last few minutes. It's important to have perspective here. That we're only back to where we were yesterday. So not the biggest sell-off, but a sell-off nonetheless. Let's bring on Tom Nash and hang out with Tom and shoot the shit. Talk about stocks. Let's bring him on here now. Tom, what's up, sir? How we doing?
What's going on, buddy?
Oh, just watching the market give back a whole chunk of gains. Not a whole chunk, like a half chunk, right?
It's been very volatile recently. I mean, it's a seesaw. We're going up and down, and down. That's a really interesting trade. When you take a look at why this is going on, makes me even more curious. I mean, think about it this way, right? So it's either that there's something completely irrational about it, or our idea about inflation and future interest rates change on a daily basis dramatically.
Wait a minute. Are you telling me that the market is not always forward-looking? Is that what you're saying? You're saying the market isn't always efficient? Is that what you're saying?
Yeah, I would never say that.
I thought the market was always efficient.
Yeah. Well, it's almost the market is at this point is like your manic depressive neighbor. You never know which mood you're gonna get today. I mean, some days you get a box of chocolates, some days you get a box of something else, which I can't say.
Dog excrement.
You never know with this market, bro. It's just I feel like there's this there's a lot of fear in the market, rightfully so, but also like very irrational behaviors. Like it still baffles me why concerns of higher interest rates would lead to selling off companies like Apple and Amazon, which makes no sense if you look at it. Like,
I agree with you on principle. I think, as I understand it, it has more to do with a rising interest rates equals reframing your expectations for economic growth, broadly speaking. But I agree with you. Hey, if you're a long-term bullish companies like Apple and Amazon, then you should want what we've been getting. You should root for that every day.
Yeah,
I agree with you about that point for sure.
I mean, they're not COVID plays, none of them. I mean, look at Amazon growth way before COVID. They've been killing it for years.
Yeah. Here, let me pull up like a long. I love this Amazon chart. This long-term chart is a thing of beauty. Let me just pull my screen. Look at that thing. Look at that thing of beauty.
And for a reason, though, there's a reason. If you just take a look at the revenues, something completely simple. You don't have to be a neuroscientist to look at revenues. It's a very simple number. And if you pull back revenues of Amazon all the way to 2015, they were making 107 billion.
Yeah, quarterly revenue. This is Amazon quarterly revenue. You can see 2015. Going back to 2012, in Q2 2012, their revenue was 12 billion, almost 13 billion. In Q2 2012.
Look at it now.
In Q2 of 2020, it was 80. During a pandemic, it was $88 billion.
But if you just neutralize the pandemic, it's still they've pretty much been growing at a 40% rate per year, regardless of the pandemic. And it's just a company that's been completely reinvesting every single penny back into the business religiously.
The
cash flow. So I don't know. I think Amazon is excluding any antitrust concerns, which is pretty much the only thing that can stop Amazon from taking over the world at this point. Uh, I think they're grossly undervalued unless they get halted by any regulators for being too big. They're going to be probably they're crossing 4,000 in my opinion. By end of 22 they'll cross $4,000 per stock per share. I think they even have more room to grow, but again, this is you have to assume there's not going to be any regulatory intervention because they're getting so big at this point.
Yeah.
On the other hand, that's the same regulators that let the telecom market consolidate into one company.
So, well, those same regulators are now going to Facebook and go, whoa, wait a minute, Facebook, wait a minute there, wait a minute. I know we let you buy Instagram and WhatsApp, but that might not have been such a great idea in hindsight.
The funny thing is that most of the businesses of Amazon are not really that related to begin with. As far as if you look at it, I'm not an antitrust lawyer, but I mean, their streaming business has nothing to do with the commercial streaming business. Has nothing to do with AWS, which has nothing to do with the actual retail e-commerce business. They're completely independent. So there's not. I can't see even any network effects there at all. They're separate entities. But I guess at this point, I think Jeff doesn't really care anymore. He's out having fun. I mean, he's out on enjoying life.
Yeah.
I'm heavy into Amazon. I'm a big Amazon bull. I think it's one of those companies that almost now is so affordable with this latest dip. You can get it at a really good price and just sleep easy knowing your money is in a good company. It's a classic blue chip, but with a lot of growth opportunities, which is something you don't get to see every day.
Tom, you've seen that interview from CNBC from like 20 years ago, right? Where they were like, are you a tech company or and he was like, tech company, schmeck company. Who cares? Who cares what we are? And like, with the benefit of hindsight, that interview does not age well from the point of the interviewer. But I mean, that's the way it goes sometimes.
I think was that there was also one interview when he was driving like a Corolla and they were giving him a hard time about it. And
I think that was on 60 Minutes.
Yeah.
And he was like, "There's just this random dude with an office and a loud laugh and a Toyota Corolla, and hey, it's worked out. They're like a super company. It's not fair."
Yeah, I think it's times like these make me want to try to look for companies on the growth side that I completely have faith in.
Yep.
But also try to put my money into blue chip companies, so that I consolidate my positions a little bit better.
Sure. So let's move away from Amazon. And who else is on that list for you?
Well, there's a actual. I've been very bullish also on Palantir on the tech growth side.
Okay.
If you take a look at Palantir's business, and you take a look at the volatility is crazy, but you have to understand there's a lot of short interest on that stock.
Sure.
And there's a lot of misunderstanding of what they do. I think Palantir. I just heard Peter Thiel in an interview talk about the fact that they have no salespeople in that company whatsoever. I don't remember where I saw it. I think it was really interesting. So Palantir is a really interesting company. I think Palantir is one of those growth companies that I really feel could make an impact on how we actually operate as a society. So it's a very potentially disruptive company. What they do, to the best of my understanding, is not as as an engineer, but essentially these guys have their shit together in the sense that they'll take huge amounts of data and apply a government produced tool that was completely uneconomical to build for 17 years and provide you with the decision making mechanism, basically predicting the future. It's as insane as it sounds.
You know what's funny? You know what's funny is every explanation of Palantir has to start the same way. Well, as best as I understand it, because nobody really understands.
Nobody understands. But hey, their customers keep coming back. Their customer growth is really nice. They're adding commercial customers. Their customer concentration is going down. they're spending money on their employees. They just gave out 2.5 billion in employee stock options to everybody, not just Alex and his buddies. I mean, everybody got a piece of that, which is a sign of a good, smart company. And think about it this way, Spencer. I mean, what's the best way to develop something that's completely irrational? I know that sounds weird, right? What am I talking about?
Have the government pay for it.
Have the government, have the army pay for that, or a defense, like the military can pretty much produce whatever because it's completely not cost effective.
Yep.
So they did it for 17 years. It's a marathon.
Yep.
And now they're monopolizing a market in which they literally have no competitors. They're very industry agnostic. I mean, they're signing partnerships left and right. IBM, Amazon. Every day you hear of a new partnership. Already in year 2, I believe, on the commercial side, they're already at 40% of their companies already generating revenue from the commercial side. And those commercial clients, as scarce as they are, span all the way from mining companies to healthcare to like 16 different industries which they serve in this. So it's a really interesting play. I think that this is definitely just the beginning of Palantir. That's one of those stocks I'm extremely excited about to see what's going to happen in the next 5 years. I think that they remind me a lot of Tesla in the sense that I don't think they're the same company, they're in different industry, but they remind me in the sense that they're creating a new way of thinking about things. About how people think about ERPs, CRMs, big data management. It's a lot more in that sense that a predictive tool rather than an analytical tool, which is something I am completely excited about. Plus, every engineer friend I have says that they're amazing. So,
thanks to Elsie in chat for pointing out that the CEO will be on Closing Bell. Alex Karp will be on Closing Bell on CNBC. I would presume sometime between 3 and 4 o'clock, which is here soon. So we know that stocks can go up when their execs are on CNBC. So be mindful of that. This is like a classic stock. I don't know how long you are, Tom. If you're just like kind of long, or if you're like extremely long.
No, I'm not. I bought through the dip like crazy.
Okay. This is like a classic stock that I would like throw 2% of my portfolio into just to see, just take a flyer just to see, right? Because you don't know. To Tom's point, we don't really know what this company could be yet. So,
well, here's a little nugget for you.
Yeah.
Not that I'm saying you should be basing your investment decisions based on what I think or based on what anybody else does.
Please don't do that.
But if you take a look at what ARK has been doing with Palantir, it's also very interesting to see the pattern that ARK took with Palantir. So ARK literally had zero stock of Palantir in October 2020, right? They right now have in one fund 5 million shares, and in RK over 10.5 million shares.
Wait, so I'm just curious what the float is on this thing. So it's very large. Okay, there are a lot of shares out there. So okay.
Well, okay. So if you pull up their data, RK are now I think over 1.5% of RK is Palantir. And that's a lot for that fund. I mean, Tesla is 10% of that fund. So she's been very bullish on that. But I mean, she's really hyper pro innovation. So that's why you would expect that. I actually want to show you something out of left field if you want to take
it. Sure. What do you got? Also, wait, before you do that, people in chat are asking, what's triggering the sell-off. First of all, we have bounced pretty hard. Let me, if I can pull up the SPY for just 1 second. You can see we have bounced nicely these past few minutes. As far as what triggered that sell-off that started this morning, in particular in the last hour or so, I don't know. I'm sorry. Jason B.
You might want to take a look at the bond yields. Usually that's
hey, I mean TNX is going out. They're exactly inversely correlated, right? That's not the ticker. But wait, what? Not TNX. What am I looking at?
Usually you take a look at the 10-year at the rate
TNX. The 10-year index. 10-year index. It's been going up. Market's been going down. And that correlation is in play. But as far as what's triggered that in the last hour, I can't say for sure. Tom, sorry to interrupt you. What were you going to say?
No, it's fine. It's actually a very interesting discussion, and so here's what I'm looking at right now.
Yep.
So I'm looking at the chart. So they're up on the day. That's why you have some selling activity. I'm looking at this is today's chart. Yeah, it's up pretty steeply, all the way from 1594 to 1615. It's a pretty steep incline for.
Wait, what is this? What chart?
This is the 10-year treasury.
Okay,
note.
The 10-year yield. Yeah. We're at 1625, right? 27.
I see 15 on my end. Doesn't matter, but we started the day at 159.
Yeah.
So that's a pretty steep incline. Yeah. When it climbs up that fast, not specifically the rate is what's concerning, but like the rate of going up. That's where you see a lot of selling activity. People get spooked. But I wanted to share with you, like literally out of left field.
Yeah.
I had no idea about it up until a few days ago. One of my Patreons actually told me about it. I started digging into it, and I really fell in love with it. It's called GNOG. Golden
Nugget. Okay. Yeah, we know them.
So I've been researching. I'm a deep kind of fundamentals guy. I don't understand technical trading whatsoever. So I look at just strictly fundamentals. And when I took a look at GNOG, I saw a lot of really exciting stuff. So it's a relatively new company, right? They've been around for what? This is year 3, probably. That's the online play for the physical casinos, right? So 80% gross margin, EBITDA almost 33%, meaning they're actually profitable in year 3, and I'll explain why in a second, because I actually dug deep into this. Some of it you probably already know, Spencer, right? Year-over-year revenue growth 30%, EBITDA growth year-over-year 48%, and their EV to sales is 10.7. If you look at the EV to sales of DraftKings, it's like 41 or 42, which is a nice comparable to kind of look at how over or undervalued it is. It's very telling in that sense. So again, it's a much smaller company. When you talk actual numbers, they did 70 million in revenues trailing 12 months, right? However, just in December 2018, when they did the annuals, they had like 38. So it's a nice path. This company literally spends $0 on marketing and customer acquisition because of the physical assets. So they're driving a lot of traffic from the physical assets that they have. They're affiliated with the restaurant chain and a lot of physical locations, and they're slowly getting these online permits. They got New York, I think, set up already. I'm not really a specialist on this, but the way gaming works online, you'll have to. There's a certain amount of spots in each state that's affiliated to the number of physical casinos, right? So their network allows them to slowly secure all these, like, tentacles. And I think at some point the floodgates on this industry will be open. You can't stop that from happening. And as DraftKings I think DraftKings is one of those companies going to explode. I think this company, which does something completely different, they're doing specifically online casinos. I think that might be really interesting to see. I think it's a $25 stock.
Okay.
I think it's really rare for me to see an online casino that doesn't spend any money on customer acquisition. I mean, I've never seen that happen, and I've never seen one being profitable so quickly. Year 3 generating 32% EBITDA. That's, for me, that's kind of, as a fundamentals guy, I was like, oh, that's interesting.
You just brought up a great point about looking at fundamentals not within a vacuum, right? Because if you looked at Golden Nugget Online's balance sheet, yeah, it would tell you about the company. But if you didn't know what their peers were doing, then it wouldn't tell you as much, right? Like the fact that you went and then looked at, okay, customer acquisition, they don't really spend a lot to acquire new customers. How does that compare to DraftKings and Penn and MGM and the other online? I mean, MGM is more.
Look at how much DraftKings is spending on marketing. You'll be blown away.
Yeah. Oh, yeah. Their ads are in my face right now.
Well, I mean, they have cool ads. I mean, you have to do that cool ads.
Yeah, they're. I mean, we're in Michigan where sports betting just went live like a month ago, and
Go Blue.
Right. I know you. We know, Tom. We'll have to talk about this weekend.
You know, I had to live through the worst years of Michigan football, and so I lived through the first 3 years of John Beeline before he started winning,
Yeah, when
and
they were yeah.
I lived through Rich Rod, which was
Hey,
excruciating.
I'm not even a Michigan guy, and I remember Rich Rod. It was, and then Brady Hoke was even more fun, right?
So that's what was, dude, I saw Stephen Threet, and I love Stephen Threet. Shout out to Stephen. He was the quarterback of that Rich Rod team. He was trying to run this. Never mind, we're getting sidetracked.
I don't even know who that
I-
is.
yeah.
Point still stands in Michigan. Sports betting went live, and DraftKings ads are in. DraftKings and FanDuel are in my face.
Well, that's March Madness. I mean, nobody's gonna go to work, but until the rest of the week, until the rest of the month.
Don't tell Jason that, all right? Because
When I was working in New York, we had like the people I was working for, they put up TV screens all over the trading floor so we don't go home. Because like we know you're gonna be watching.
Hey,
just watch here.
You know, I don't know if I'm making this up or not. I might be making it up totally, but I wonder if there is an actual correlation. If trading volume is lower, like on this year, Friday, Monday, right? Because the tournament is Friday, Saturday, Sunday, Monday, the first round, or first 2 rounds. So I wonder if like we're gonna see a significantly lower trading volume on Friday. I have a hunch we might.
And I think yes, without checking the data, because the one piece of data that I know is that during the second half of March, US GDP plummets every single year.
Interesting.
Just people get sick often, some weird thing happening.
I also know that it's the best time. It's the most common time of the year to get vasectomies. So no, that's
a lot of vacations.
I'm not making that up. That is a fact.
This show is going into places we've never planned. How did we get on this?
Okay. We were talking about Golden Nugget. What about?
I want to give you one more
to
talk about.
Yeah.
Mimecast, one of my favorites, is really undervalued, I think.
What's the ticker on that?
MIME. It's a cybersecurity company. You know it.
Okay.
They took a hit because they had some PR damage with that hack with SolarWinds. I believe. I don't know exactly. Somebody used their certificate, I think, allegedly. I don't know exactly what happened. I don't think they were related connected with this. I don't even think they got hacked, but because their name got dragged into it somehow, not really sure about. So they took a big hit, and now another hit during the tech sell-off as well, obviously. But if you again look at their fundamentals. You'll see some really interesting stuff.
I actually own this. I didn't realize because I own the CIBR ETF, and this is in that. I didn't even realize. So I own this stock without knowing it.
It's a good stock. Cybersecurity is a really good industry. Cybersecurity is about to explode as everything goes more and more and more digital online. They're profitable. Almost the regular SaaS EBITDA, the gross profit, a 75% gross profit margin, which is like a standard on good SaaS companies. They're growing 20% year over year. EBITDA is they grew their EBITDA from last year to this year by 100%. 100%. They're a really interesting company. I gave it a $57 target price for myself.
Okay.
But again, you have to disengage it from the pandemic and just look at the trajectory. If you pull up their numbers, I think you can do it on your screen. As far as revenue, you'll see what I'm talking about. They went all the way from 88 million in revenue in March 2014 to 480 this year. So they 6x.
Oh, look at that. Look at that revenue, bottom row. Q3 2016, 37 million in revenue. Last quarter, 130 million in revenue. Yep, that's revenue growth right there.
They're really sound fundamental company. They're sitting on a quarter of a billion of cash, which is always kind of tells you that there's not a lot of traction issues. I mean, they tripled their employee number from 2016 or 2015 all the way to this year. Triple or quadruple their employee number. So they're definitely growing. I think it's one of those companies that took a hit because of the interest rates. the tech sell off, some PR nonsense that it will blow away because eventually sometimes my Russian accent like looks blow away. It's so funny to hear that. But I think this latest sell off kind of brought a lot of good stocks into the affordable range.
Yep.
Where there's literally it's a buyer's market now. A lot of really interesting stock at a really reasonable price.
I just want to do a mea culpa. Jay Rice coming through the clutch. We forgot, Tom, what Friday is. It's not just the first day of the tournament. It is also a quad witch and an S&P rebalance. So volume will probably not be lower on Friday. It'll probably be much higher.
Yeah.
That being said, in a normal year, I bet
In
a normal year when there's not a quad witch, I bet you a volume would be lower. But hat tip to Jay Rice for reminding us about that on Friday.
I didn't have any idea. Good catch.
Yeah. You should know. So they announced the S&P rebalance last Friday, and there were 4 stocks are in, 4 stocks are out of the 500, and that'll happen. That'll be reflected as of the open on Monday, which means all the funds that track SPX are going to have to buy those stocks on
a lot of action
as close to Friday's close, and sell the ones they're removing. Doesn't necessarily mean that like Penn, for example, is going in. Doesn't mean Penn has to go up. Doesn't, but that's going to happen on Friday. Plus
from my experience, they usually load up way before. They don't. They just do it slowly, so they know how to do it without.
Right, exactly. These guys are pros, right? They know what they're doing. They know how to get in without moving the market. That's what they want. They also don't want to deviate to, like, if you buy Penn today, then you've got basically 3 days of tracking error, right? You don't necessarily want that, but these guys are pros. This is what they do for a living. They know exactly how to get in and out of positions without moving the market. So
they do it slow and in advance because they usually know. I mean, they know what's going in. Look at Tesla. When Tesla went in, there's not really a lot that happened as well.
Yeah. Well, the whole thing was like a front run, right? People were trying to front run, and they just pulled the rug out, right? When was that? That was was December when that happened. Yeah, it was a
couple months.
Yeah, and there was a whole rally into the ad. That was okay, Tom. We've had you on for like 20 minutes. Any final thoughts for us before
I'll give you one more. One more. It's gonna blow your mind.
Yep.
Everybody's selling Peloton, and I think it's a massive mistake. I think that company, as people love to hate Peloton, it's a classic COVID stock. No, it's not. No, it's not. No, it's not. Look at Peloton. Look at the fundamentals. Don't listen to the hype. A lot of short interest in that company.
Tell us about the funnies.
Okay, simple.
Yep.
Okay, can we agree that by mid 2019 we had no pandemic effects? You on? Okay,
of course.
But will you stipulate to that? Okay.
Of course we agree about that.
So their revenues went from, they have a split year, so they don't do calendar year, they do June.
Okay.
So I have it in my notes here. I came ready. June 2017 annual revenues 216 million. Yeah. June 2019, 2 years later, pre-pandemic, 915 million.
Yep.
That's 4x. It's 400% on revenues in 2 years. Way before the pandemic, has nothing to do with the pandemic. So that's what people kind of tend to forget. Peloton was exploding out of the stratosphere before the pandemic. The thing about the pandemic that a lot of people kind of forget, some companies were created based on the pandemic, and some companies got accelerated like an amplifier. A good thing got accelerated. I got people in villages in Russia asking for the bike.
What?
Because they can't get it shipped over there. I mean, people are going gaga about this company. I think Peloton coming down to earth, back to normal, sane pricing is really interesting at this price.
What is like a sane valuation? Because the PE on this thing is what?
Well, you have to see the vision. Obviously, it's still high. But I mean, at $100, it's probably a nice entry point if you buy into the vision of what a post-pandemic economy looks like.
Right.
Especially, let's say that, I mean, you and me can talk about it, right? We don't really like to work out. I think you can see on my face. I mean, we don't really work out. I mean,
Hey,
we're lazy.
I'm here.
We're lazy,
I eating clementines, man. Speak for
bro.
yourself.
It
No,
takes one.
don't
It
speak for
takes
yourself.
one to know one. Dude, I hear you and I see you. But let's say that you and me decide we want to get in shape this year, right? The year of the
Yeah,
reckoning. So, which
yeah,
I'm contemplating, by the way, to do. With the fact that you're working so many hours, you're spending so much hours at home now because there's less places to go out. So it literally your whole patterns of recreation and employment have changed
yep.
to the fact that you're spending more at home. What would be your first choice to get into shape, right? Would you go and sign up for a gym, risk yourself? And I
Hell
mean,
no. Hell
you,
no.
you either
Hell
buy
no.
so I mean either a treadmill or a bike. There's not a lot of options for cardio at home, right? And so I think our patterns of consumption, recreation, working out, and just employment have changed. As we go out of this crisis and go back into this new economy, a lot of stuff we kind of found out are way more efficient. I mean, right? There's a lot more efficiencies in this post-pandemic world. I think Peloton were growing 2, 3, 4x per year before that. This is only going to get accelerated. This isn't a company that people talk about it like it's some sort of one of those devices that you know the infomercials, like the butt press or whatever, like this like little like
The shake weight is
yeah
one.
whatever yeah.
Yeah.
No, Peloton wasn't. It's not one of those companies that just came out of
Yeah.
the blue. I mean, it's a
Yeah.
really good company. I like their style. All my biker friends, the hardcore bikers, the one with
Yep.
they hate it. Like, oh, that's not real biking. That's nonsense. And that makes me feel like if they hate it, people like me love it, which means most
Yeah.
most people love that shit.
Right.
It's essentially it's just a bike with an iPad, but really good content for you to work out.
Yeah, I remember Jason Raznick talking about this thing a year. This is pre-IPO years ago, like 3-4 years ago, and he was like, "You don't understand. It's a content play. It's a content play." And
Yeah, he's right.
I was like, "What is this guy smoking?"
No, but he
But
was right. He was right.
but he was right.
Dude, I learned not to doubt Jason. He has a
I
style about him where
I know.
he makes it sound so simple.
Yeah.
But more often than not, the dude is right. And
Yeah. Yeah. Yeah.
his track record is good.
Fade him at your own risk. I would say that. Fade him at your own risk.
I had him on my podcast, and I actually got him to cry. Just so you know.
Really?
Yeah.
Holy! I didn't know that. I'm gonna have to go watch that.
No, it was an emotional moment, and
Oh man.
yeah, we. I mean, he's one of the real guys. I like Jason.
Oh, all right.
And I don't have to say it because he doesn't pay my salary, so I can say
Yeah,
whatever the fuck I want.
you can say whatever you want. Say whatever you want.
I'm completely non-biased. That's the good thing about me not being sponsored by anybody. I have no sponsorships. I don't owe nothing to anybody. So that's the cool part about
Just
it.
yourself. That's it. All right. Speaking of that, Tom Nash, if you haven't already seen his channel, it's been placed. The link has been in the chat. You can literally just go to YouTube and search Tom Nash, and his channel is like Tom Nash TV. It's right there.
I'm not affiliated with Tom Hash. Do not go to Tom Hash channel. He's an asshole.
Who's Tom Hash?
I'm just joking.
Oh,
there's no Tom Hash.
I thought that was a real person for a second.
No. There's no Tom.
Right.
Not to my understanding. I was just kidding around.
All right. Well, Tom, we appreciate it, man. As we've been talking, so basically since you and I started talking, the market's rebounded. So,
dude, we're casting good.
Yeah.
Very nice. Great success.
Great success. All right. Tom Nash, as I mentioned.
You remember the scene from Borat where the dude is like, "We have a telegram for you." Oh, what happened? It's like your wife passed away.
Oh,
like,
yeah.
Oh no! High five.
Yeah, I actually just rewatched Borat for the first time since it first came out, like a few months ago, and the movie holds up. The movie holds up.
Especially the opening scene. The opening scene is powerful in Romania where they shot it in that village.
the movie holds up.
Yeah.
That's. I'll leave it at that. Tom, always a pleasure, man. Thanks a lot. When we'll check back in with you and see. Oh, and there was a question in chat real fast about what was it? Was it Fortinet? They asked about.
Yeah, one of my favorites.
They asked if you were stopped out. I think it was Fortinet.
No, I'm still in. I believe it's one of my favorite companies. I really like cybersecurity.
Yeah.
So any good company cybersecurity, I try to be in because I think that's the future as things go more digital, more e-commerce, cybersecurity. That's why I like Mimecast. I like Fortinet.
Yeah.
I like all these companies who serve. CrowdStrike is also a phenomenal company. These cybersecurity plays, there's room for all of them. They're not counter exclusive at all.
Yep. I don't know why it says add. It says add top. Who wrote that banner? Add top Nash. What is that?
I just noticed this shit.
What is that?
Is this Rohit? Who did it? Did you do it, right?
It wasn't me. I've been on with you the whole time, man. It wasn't me. It wasn't me. Oh.
You need to remove the ad, I think. Oh, whatever. Listen, I've been working with StreamYard for a couple months, and I had really weird banners pop up because they didn't pay attention. So
really?
I feel your pain. Yeah. Right. This is Stream, but listen, StreamYard is great. Look at how great it looks.
Hey,
but I mean,
easy to use. That's all I care about.
Definitely.
All right, everyone, smash that like button for Top Nash, Top Tom Nash,
Top Hash,
Top Tom Nash hash. Smash that like, everyone, please, and thank you. We're at like 60 likes, which is not enough. We gotta get to at least 250. Tom, I'm gonna let you go. Thanks a lot, sir. We're getting ready for the close.
Play me out.
All right. Have a good one, sir.
Later,
all right. So it is 3:20. We do have pre-market prep at the close set to start in like 10 minutes. I'm just going to hang out until then on this stream. We'll end this stream. We'll grab Joel Kahn, and we'll get you ready for the close with the At the Close show, Joel and myself and Mitch. In the meantime, what's on y'all's radar? It's been as I mentioned, a comeback of a day to an extent. We are basically unchanged. We are unchanged in SPY. We are up in the Qs, and we are still down significantly in the Russell. Let me pull up my charts here so y'all can see what I'm looking at. This is a 1 minute chart. They tell me I need to look at that more. Yeah, look at that. We're like unchanged, right? We were up. We leaked the entirety, basically of the entirety of the afternoon, the late morning, early afternoon, until about, what is that? And is it an hour ago? 40 minutes ago? 45 minutes ago? Basically, since then, we've been on this steady, and we just turned green. We just turned green on the day in SPY. That's what you want to see. That's what you want to see. The kid is telling me to go home. The kid, spoiler alert, I don't have a home. I live at the Benzinga office. So I'm always home. I'm always home. The kid. If you have a spare room, let me know. No. Russell, man, IWM is struggling though. Let's pull it up. Small caps, value on the struggle bus today.
You got it.
I got it.
The rotation, baby. Look at the big boys. Sideways move. Look at the markets.
Let's take a look. Apple up. Amazon, we just looked at for 10 minutes, is up. Facebook is up. Netflix is up.
So
Google up.
One thing
Microsoft
that I'm looking at,
up.
Sideways action on the big boys shows me that those down moves shouldn't at least get you too frightened immediately. It's crazy. It's a crazy market, though. There's certain things up, certain things down, certain things all around.
That's how I know. I mean, we are certainly more down than up today. If you look at the S&P 500, there is more red than green. That being said, what Mitch just said, the big guns are all green, with the exception. What's Tesla today? Is Tesla down? I think Tesla's down. Tesla is down. So with the exception of Tesla, the big guns are up, which is basically all of that gets you to an unchanged market. We've got like 3/4 of stocks down. We've got the big guns up, and that plus that equals unchanged.
Is fundamentals coming back? I think we need to have Tom Nash a little bit more. Got to learn some fundamentals, man. It might be coming back into play.
Got to get the fundies out there for sure. Hey, fundamentals are always important. It's just their importance in the hierarchy of things in the market fluctuates, but they're always important in my opinion. It's just sometimes they get overtaken by story or technicals or whatever.
Growth momentum, when there's growth and momentum at the forefront, it's all about the hype, all about the what's the next story, what's the next move.
Yeah.
But when all that goes away and then we start actually paying attention to what are the best companies, that's when you see these top companies start coming back into favor. I think it's interesting to definitely kind of pay attention to tech. Bank of America coming out, I think it was yesterday or this morning, saying that they were looking at tech, and they were the banks were saying sell the banks. So it's interesting. You know, was this probably a huge moment for us to get tech into your portfolio? It could have been. Very could have been.
That's the thing, right? Is like let me zoom out. Every time tech gets weak, it has been, with hindsight, a buying opportunity. But in the moment, you're like, oh shit, is this it? Is this the moment that tech comes down to earth and value catches up for once? Finally, it has not been the case. Here's what I want to know. If Joel were here, he would do this too. Well, so this is a daily chart of the Qs. What is the 50%? So the all-time high was back on the 16th. All-time high was 338.19. The low on that one day on the 5th was at 297. So whatever I want to know the midpoint. The midpoint between 338 and 297. I think we're past it. We are past that midpoint today.
Yeah, we're like right by it, a little bit above it.
Yep. That's that. I mean, hey, that's bullish. And just because you missed the move, the first half of this move, right? Just because you missed that move over the last week, from the 5th week and a half, really, the 5th to today, does not mean that you can't partake. You can partake. You can play. Look at all this room we got between now and the all-time high. There's still room to be bullish. Don't think that we're done going up just because, I missed the bottom. It's too late. You're never going to get the bottom. It's just, that's not how it works. Or the top, for that matter, if you're short. It's not that easy, right?
Long term, this is when you got to determine what kind of trader you are. A lot of the times, there's traders that are working for a day. There's traders that are working for a weekend. Then there's weekly traders that are doing, like, let's say, weekly swings, 2 weeks, 3 weeks out. And then there's the real investors that are looking at the monthly charts and the kind of even the yearly, but they will go that far back. And if you look at the monthly, that's, I think, kind of the best way to, if you're really trying to attack a low, you look at the monthly chart, and then that's usually going to give you at least a further out approach to try to attack those lows. But the biggest thing about a monthly chart is you're talking about a whole month on the downtrend when you're getting in. So you always got to understand your levels, understand your risk. And this is when I always talk about kind of Warren Buffett and talking about how, let's say if you see overall market go down 10, 20%, those are usually buying opportunities, at least from what we've seen in the data. It doesn't necessarily mean that when you go down 10, 20%, that it's kind of time to get worried. It's time to reevaluate and look for those value.
Yep, that's it. Okay, I'm going to leave you in the hands of Mitch. I will see you all in 3 minutes for PMP
minutos
at the close with
for
Mr. Elkanin. With what?
3 minutos.
That's it. Mitch, I'll see you there.
It's kind of like the 2-minute warning in basketball, but we'll do a 3-minute warning here. I grew up in Miami where they say 2 minutos. They say it with it too. I enjoy it. The life. All right, guys. So one thing I did want to bring up is Tom Nash was talking about Peloton. And this is one that I kind of agree with the way that he looked at the fundamentals, but I'll talk a little bit about the story and kind of what I think is going to happen in Peloton. So Peloton is I think they pivoted here and they kind of changed it up, guys. What they did was, Peloton, I think at first was that just bike play. And it was focused on that the bike was going to be the majority part of the business. But I think they pivoted and they saw something in the pandemic, and I think they're going to really jump on it this year. So what I saw was, if we look back trend-wise and social trend-wise, there was a period about, let's say, 5 years back where really at the end of the day, physical training and being a personal trainer really became a trend, a big trend. You saw all your friends becoming personal trainers and getting personal training certifications. I have friends that even have master's degrees in this industry. So I've seen this industry grow. And one thing I noticed is that all these personal trainers were moving into the gym and kind of training people inside of gyms. One thing that changed is how will the personal trainer be brought to you at home? And I think this is the one thing you got to pay attention to when we talk about Peloton, is how this is going to change over. And is the personal training going to just go to the home aspect where I can go ahead and talk to that personal trainer at my home, maybe even using video communication. Maybe you see some kind of video communication where you can actually communicate with the personal trainer. But this means that you no longer need to be going out of your house, going to the personal trainer, and they can train you right back in your living room, and you don't have to go anywhere. So I think they jumped on this trend, and it's something that I'm going to definitely keep an eye out, and that's in Peloton, guys. So definitely hit the like button. Yep. And you know the love. 2 minutos, Miami Heat. We got it going. 1 more minute to at the close. If you guys can do me a favor, when at the close starts, let Joel Elconin know how much you guys appreciate him and how much you guys appreciate his knowledge that he gives us on at the close. So I always try to give him some feedback. So let him know how much you guys truly appreciate him. So do us a favor, hit the like button. Definitely smash that like button. Hit the subscribe button down below if you're new to the show. At the close is next. And if you don't have them already, definitely add them on Twitter, guys. Right here at SPU, the Spoose. You already know that's Joel Elconin's handle right there, guys. So definitely add him. And I'm going to be shutting this down as we get to at the close. I'll see you guys at the close. Switch on over.